Hi, folks. Dan Bird with the Daily Scan for the 19th of December, Friday. It is options expiration day today, and it looks like options and the market wants to go up. So, nice little rally today. We'll see if it can last. I'm not a financial advisor, so this is for educational purposes only. There's only a couple of things extra things that I want to talk about today, so this should be a quick one, but let's take a look at what's going on here first. By the way, the stock charts holiday sale is still going on, 25% off if you're interested in participating in that. So let's look at the S&P first, see what it's doing. And clearly it's going up. So nice rally this morning, went sideways a little bit and then started to move higher. By the way, yesterday I said that we had a rally and then we had a consolidation, and many times the consolidation breaks to the upside, but it didn't. Instead, it broke to the downside and went down the same distance as it started from. So sold off, pulled back up, came back down. So pretty much didn't do much yesterday, but today it's starting to take off. So maybe it's now thinking about that CPI number and inflation and everything else. Micron earnings came in nicely, so the market's taken off. However, let's take a look at this. These are relative charts down here. So the aggressive side technology is up. Yes, it is up right off of the open. And then it's just been flat since then. So not really that convincing. Discretionary is actually down. Communications is down. Financials is flat after being down. Industrials is flat after trending down from last week. So the money does not look to me like that it's rotating back into aggressive in a significant way. So maybe it's just a short-term blip, or maybe it's just till the end of the year, since next week we start the Santa rally, which I'll be talking about next week. We'll start to track that. Santa rally begins on the 24th. So that is next Wednesday. We'll start to track it then. So that's what it looks like right now. Nice little bump this morning. Let's see if it can hold that or even move higher. The defensives are all down, so that's a good sign. Money's moving out of defensive areas. Healthcare is pretty much flat. But the other three most defensive money is moving out of those. So it looks like it is moving back into technology a little bit. And the materials, which is where gold is, and energy's down. Materials is pretty much flat, not doing much. We'll look at gold in a second too. Rotation, growth versus value is hanging in there. Not really screaming higher, but it is pretty much hanging out there. Discretionary versus staples is flat. Technology is up slightly. Semis are up slightly. That SOXS trade is down today, as you would expect, with semiconductors moving up. But we'll see if the market rallies, it's going to go down into the end of the year, and then we'll see what happens at the beginning of the year. Transports are starting to make a comeback right now. Here's what breadth looks like. Breadth looks pretty good. Like I mentioned before, we're back. The S&P is back above the 21 EMA, and the percentage of stocks above their 20, 50, and 200 are all moving higher. Bullish percent index, though, is pretty much pulled back and then just sitting there, not doing anything, sitting right on its moving average line. So again, there's not a lot of conviction in this rally. Could be just an end of the year rally. Here's the Russell, small and mid caps. You can see down here, large caps are outperforming right now. Both the mid and the small caps in particular are selling off more. Money flow is still negative on the Russell. Let me go back and look at the S&P. Money flow is nice, moved up yesterday. Even as it pulled back right here in the middle of the day, money flow started to get positive. So money flow is still up there, hanging out there, which is good. But the Russell, on the other hand, money flow is the other way. Money flow looks negative. And here's breadth. So breadth, again, mid caps, breadth is continuing to move down, even though it's up a little bit today and above the 21, breadth is moving lower. So what is that telling us? Here's the small cap, same thing. It's actually moving lower a little more quickly. Notice right here, percentage above the 20-day is right just below the, I think that's a 50-day moving average. No, it's a 21 This is a 21-day moving average. So it's just below it on the small caps and basically right at it on the mid caps. And then NASDAQ 100, nice little rally. That's where most of the money is moving today. Money flow is going negative right now, but so it's going sideways. It came right back to Monday's open. And now that's becoming a significant resistance. So it needs to break above that. Hopefully by the end of the day, advancers are looking good. Advancers versus decliners, and up volume looks pretty good. And the VIX is way down now. Again, 15.33 is where the VIX is. So the VIX, after a very brief period up here above 17, is now pulled way back down to 15. So there's no panic in the market. There's no panic selling. The rally is continuing. The money's moving back, and I think it wants to stay there into the end of the year. Here's the NASDAQ 100 is above the 21 today, so far at least. By the way, it's 12:40 p.m. on the East Coast. And percentage of stocks above the 20 has a significant reversal back to the upside here. So the breadth looks actually pretty good. The money's moving back into the NASDAQ stocks, and bullish percent index is moving up too. So that's where the action is over there on the NASDAQ. Let's take a look at the indexes from a wider perspective and look also at the updates that I make every day, every morning. Over here, the gamma flip line, everything is above all the lines. It's above the call and put wall. Call and put wall are at the same place. So interestingly, that today, you can see this vertical gray line is options expiration. That's today. With options expiring, everything is sitting right in the middle of the expected move. It's above the gamma line and above the call and put walls. So it looks like market makers would like to see the market go higher, probably to make sure that all the puts that were bought during this period where everybody thought that the market was getting ready to crash, those will now expire worthless as the market moves up, and market makers will not have to pay out that premium. So that's likely, it looks to me like that likely will continue. The RSI is moving up, momentum is moving up, just starting to cross over like it did right here on this white candle. So this could be a little bit of a rally back, maybe even back to 7,000. Who knows? 7,000's right there. I've been saying that for a while, and so far it keeps trying to get up there. 6,900 is where the resistance is. So another 100 points above that would be nice if we could make it there. Right now it's at 68.36. Let's look at NASDAQ 100, see what that looks like. Very similar, nice candle, not quite as tall as the S&P, but moving up nicely. It's above the gamma line, above the call and the put wall, which actually is right up here. I'll move that. Call, the put wall is this dotted line up here. They're also at the same place for the NASDAQ 100. And the gamma flip line is also they're pretty much exactly at the same place. So it's above all of those support areas after dropping below it briefly, then came right back up. And momentum is all starting to move higher. On the Russell, small and mid caps, it's also looks very similar. Now it's above the gamma line. It's also above its put and call wall, just like the other indexes are. And Bitcoin, haven't looked at Bitcoin today. Let's take a look, see what that looks like. Bitcoin is trying to go back up there. Look how it goes up here and continues. This is a good example of the importance of that 21-day EMA that I did on Technical Tuesday. If you want to learn more about that, just go back and look at Technical Tuesday for this week, where I talked about the 21. You can see right here, it hit it 1, 2, 3 days in a row and just barely touched it and then got rejected. You can see it over here. This is the zoomed in view over here. You can see it just basically touches the 21 EMA and gets rejected, moves back down as soon as it does that. So getting above that is a really critical, important resistance line for the for Bitcoin. And Bitcoin now is in the negative. It's now red for momentum up here on the squeeze chart. So Bitcoin continues to try to make another run higher, but keeps getting rejected. So this is an important support line right down here. It's about 84,000. It needs to break. It needs to stay above that. It needs to break this 21 EMA and then the 50 and then the 200. But the 21 for sure is really the battleground right now. You can see it's also the trend line moving down. So we'll see what happens. Again, Bitcoin doesn't know where I'm drawing these lines. It has no idea. It doesn't know where I'm putting my moving average lines. It has no idea. So why is this so consistently doing this? Because every other trader out there is seeing the exact same thing. And that's why technical analysis works, because it is a visual representation of market psychology. And every other trader is watching this 21, sees that it keeps getting rejected right there, watches this trend line from back here. So they're all waiting to see if it breaks out too. Now, if it does, for that same reason, market psychology, they have all of their buy orders sitting right up here. So once it breaks out of there, especially with volume, and the last 2 days have been pretty high negative volume. Today, so far, it's only halfway through the day. We got about 3.5 hours left. So far, it's sitting right down here. Kind of looks like kind of normal volume so far. But if it breaks out of that with volume, then you've got a lot of buyers likely sitting right up here. All right. I want to do something that I keep forgetting to do every day. So I am going to do it right now. And that is show you what came in on my squeeze alert. So first of all, I'll show you the one for yesterday. This is the squeeze alert for yesterday. This is SOC, Sable Offshore Corporation. It had a nice move higher right to the 50-day with big, huge volume. This is in integrated oil and gas. And today it's just moving sideways. So that is a short squeeze, but it's got, shorts are for way back here. So it's not really going to be in a significant squeeze. The volume tells you that it could be a squeeze, but shorts don't feel pain until it gets above the previous highs back here where the shorts began shorting. So keep an eye on it though, because it could. Now, what about today? There's one that came in today as well. Here's today's short squeeze. This is a really interesting one, actually. Lunar machines. Look at that. Nice candle. This is definitely where shorts will feel pain. In fact, they probably started feeling pain through this period here as well. So this could be a valid short squeeze. Huge volume right here. They reported on November the 13th, so it's not due to earnings. I don't know what the news was. You could look that up. This is in aerospace, industrial aerospace, intuitive machines. This could be a really good valid short squeeze right here. Here's the longer term. You can see where resistance is, sitting right at resistance right now. And all the shorts that were shorting all the way through here, some of them may have got out through this period, but most likely today, a lot of these shorts are starting to cover. And that could continue for a while. So keep an eye on that one. So that I wanted to bring that up because I keep forgetting to show the short alerts. Those are two of them that came in today. All right. Dashboard. Everything is green. VIX is at 15. 10-year is higher today, 4.145, 4.5 basically. US dollar is higher as well. Commodities, gold, slightly higher. Silver, significantly higher. So silver again outperforming. Today, gasoline is up a little bit. Crypto, Bitcoin, Ethereum in particular. Ethereum is significantly outperforming Bitcoin today. So it looks like the better of the two. Technology and healthcare are the two at the top. Technology is the most aggressive sector, and it's the one that's doing the best. So that shows you where the money's moving to. Over here, like I showed before, large cap growth is where the money's moving to right now. The loser right now is small cap and mid cap value, these two right here. So looks like rotation back into growth stocks, in particular into the large cap technology. Palantir is doing nicely today, up almost 3%. Disney is up a little bit. At the bottom of the list is discretionary and staples. So interestingly, we've got two defensive sectors at the top and two aggressive sectors at the bottom. So I don't know if that has to do with Tesla. The discretionary is at the bottom. Not sure. Carnival reports today, before the open. So Carnival's already reported. Let's take a look and see what Carnival's doing. Looks like they had good news. So Carnival is taking off today. Carnival continues to move up. This one, I don't know if it's on the short squeeze list, but if there were any shorts on Carnival, they're likely covering today as well. Nice volume. So it looks like Carnival had a pretty good report. One way I like to look at those is with the relative strength. So this is Carnival versus its peers. It has clearly been outperforming its peers. If it's above this horizontal line at the 0%, it's outperforming its peers. Is it outperforming the S&P? Not yet, but it's starting to come back up. This is the industry group versus the S&P, underperforming. This is the sector, which is discretionary. It is basically flat, just going along for the ride with the S&P. And then the industry group versus its own sector is also underperforming. So really, it's just versus its peers is where the strength was. I like to look at that, and also the accumulation distribution line has been consistently going down, which you would expect with the price going down. But even as the price started coming back up right here, it really hadn't gotten above its trend line, or its moving average line, I should say. So that really wasn't telling us much, but it looks like they had a good report today. Let's go back over here and look at the three charts side by side. The SPX, S&P above all of its moving averages now, nice strong candle. Same thing with the Russell 2000, not quite as strong as the S&P, but it's getting back up there. And Bitcoin, once again, is right in this channel, sitting right below its 21, keeps hitting that 21 and bouncing back down. Rocket Lab is at the top of our momentum list today. I don't know if Rocket Lab reported. Let's take a look. Looks like all those aerospace stocks are really starting to take off today. Nope, not. It has nothing to do with earnings. So looks like the aerospace stocks are the ones that are doing really well today. Here's AST Mobile. It's another one in that space, I believe. Not quite. Mobile telecommunications. So it's just beginning, just hitting its 21 right now and starting to bounce higher. So that might be just on the verge of starting to move higher. 2 levels down, see what we have. There's Micron. Micron reported and did well. Look at Micron. Micron is now breaking out above its previous highs. So Micron continues to be really strong. Look at that over the past year, or past 7 months, I mean. Just continues to go up. And this is a good example of a stock that is supported by a lot of the big traders out there, big investment houses. When it comes down to the 50 in particular, it goes back up. Comes down to the 50, it goes back up. So it's just been continuing to do that. Did it over here just above the 21 for a while. So that implies institutional support. When you see something like that, it just continues to move higher. So they had good earnings. What else? Let's look at the losers for today. See if there's anything. Pulte is on this group. Look at Pulte. Pulte's moving down. So it looks like the home builders, in fact, a lot of the interest sensitive stocks looks like they're starting to move down today. Walmart is on the downside. There's Tesla. So Tesla is moving down. That will bring the discretionary down a little bit, but it's not significant. It's just really moving sideways. On this cup and handle, by the way, I talked about that last week. If this breaks out above the 500 level, then it could continue to run to 750. I talked about that last week. All right, I'm going to close all of these down below. And I want to talk briefly. First, I'll answer one question that somebody had, and that's regarding Nvidia, about whether Nvidia is a head and shoulders pattern. So let's take a look at, and I like to do that with the zigzag chart because it shows you the turns much more clearly. You can clearly see a head right here, and you can sort of see a left shoulder and a right shoulder, so maybe that's the case. If it is, of course, it has to complete. So we're looking at a neckline at right about 178, roughly 179. Let's call it 180. If it were to complete, it would have to drop. Really, would have to drop through this swing low back here at 165. So up here it's about 210. Say 180 right here. That's 30 points. So the target would be 150 if it were to do that, and 150 would put it way down below the 200 moving average, which I don't think it's going to get that far. Could easily get down to the bottom of this channel right here. Right now it's moving up with the rest of the market, but sitting right at its 21 EMA. If it does collapse, and you can kind of see the left shoulder, it's not a very clear head and shoulders. So my response to the question is maybe you can sort of see a head and shoulders, really just this one bar that created the right shoulder. So I really wouldn't call it a head and shoulders. It's not clear enough that it's one. If you wanted to make this the left shoulder over here, then it's got much further to go, because you want it the same distance basically from August to November. So 1, 2, 3 months. So you need to go out to probably January or February before you get the right-hand side of this. And if it stays in this range and goes up to this level, does not go higher than that, then yes, it could be. But right now, I'd say the jury is out on Nvidia being a head and shoulders. So I would probably say no, it's not. All right, the last thing I want to talk about is the announcement from Scott Bessent the other night about Trump accounts. I don't know if anyone paid any attention to that. I'm going to be studying up on that, and I will talk more about it next week, probably Monday, once I learn a little bit more of the details. But one of the things that I did, and it's actually, if you think about this, it's actually brilliant. It is an absolute brilliant move. So the idea of Trump accounts is every child that's born within Trump's term, so 2025 to 2028, I think it's the end of 28, so beginning of 25 to the end of 28, that's 4 years, every child will get $1,000. And that will go into a Trump account. They cannot touch it until they're 28. And what he said in his speech was, if they don't touch it at all, if they keep it until retirement, then it will turn into $600,000 using, I think he said 10.25% interest. So I decided just on that, there's a lot more to it than that. And I'll cover the details more next week, but I just wanted to analyze that particular piece of it. So was that true? Is it true that if you give somebody $1,000 today, and they just put it, and this is what he said, put it in a S&P index account, so an ETF like SPY, and just leave it there, don't touch it until retirement. And I'm assuming retirement at that point will be 70, not 62, not 65. Today it's 67. It'll most likely be 70, could even be higher. So I'm using 70 years old for the analysis. So I wanted to see if he was right. Would that turn into $600,000? Because that is a brilliant move. And there's a number of things I want you to think about as it relates to that. So here's the calculations. I put it in a simple spreadsheet. Here's year one, $1,000. And the assumption here is you do not add anything to it. You don't do anything. Now, there are some other ways with Trump accounts you can add to them as well. And there are some philanthropists, and Ray Dalio was the first one to step to the plate to do this. And the challenge is that a billionaire in each state will create something for all of the children in their state. So Ray Dalio is the first one for Connecticut. He's stepping up to the plate. Michael Dell and his wife have also committed a large sum of money. So there are other ways that these can be donated to. But this is just the $1,000. And it's a one-time payment when the child is born. So $1,000 they get in their account. They put it in the SPY, assuming the SPY goes up 10%. Now, Bessem said 10.25%. I actually did a search on this and asked AI, what is the average return of the S&P over the long term? And over 70 years is 10 to 11%. So his 10.25% was actually not too far off. This real average takes into account inflation, but that's really not what we're talking about here. Over the last 100 years, 9.96%, pretty close to 10. Over the last 20 years, 9%. So let's say 10%. Let's take 10% as the average. If you just put that $1,000 into SPY and don't touch it for 70 years. So here's what it looks like. This is just a simple calculation. $1,000, we start there. The next one, we just add the 10% to it. And we just do that until the age of 70. So remember, this is when the child is born. So they're actually not even one yet, but this is, let's say the first year, it's only 1,000. This probably really should be, go back 1 year, because the $1,000 is when they're born. You get to add it. And this is all done on taxes, and it will be done automatically for anybody that wants to elect to do it. So what does it mean? Let's go take a look. It's year 70. So when they turn 70 years old, yes, they have $717, almost $718,000. That's the power of compounding. Now, what does this mean? There's a couple of things, and there's probably a lot more, but I haven't thought them out yet. A couple of things that jump out at me. Number one, if this is possible, if they actually would do this, give each child $1,000, and they put it in an account and don't touch it for 70 years, why would we need to have Social Security any longer? Why would Social Security even be necessary? So this absolutely could be a replacement for Social Security. The important thing is that they don't touch it, that they leave it there for that period. Now, my understanding is that at age 28, they'd be able to take it out if they wanted to and use it for college or something like that. Now, at age 28, it's only turned into $13,000. So this really gives you a sense for the power of compounding. Right here at age 50, it's only $100,000. But by the next 20 years, it grows from that $100,000 to $700,000 in 20 years. By the way, anybody that's 50 years old today and has $100,000, you're going to get the same benefit if you just do it yourself. Just put it into the S&P, don't touch it, leave it there for 20 years. Now, you of course, want to take into account my secular bull and bear market thesis and go back and review that, because the point at which you start might be really important. But that's a whole different topic. But according to this, yes, 10% would end up being $700,000 by retirement. Now, what if it was only 9% over that period? Well, at 9%, it's almost $400,000. Still pretty good amount of money by retirement, and more than you probably would get if we had Social Security. So again, why would we need Social Security if we had a system like this? We really wouldn't need it. The second thing that jumped into my head immediately was, as we automate more and more, and as AI takes over more and more jobs, and we get more automation and we get more robotics, and productivity will go up, but people will lose jobs as a result. Like Elon Musk said, at some point in the future, nobody will need to work anymore. And I thought that was a bold statement, but it actually is quite possible. If productivity really is improved by technology, then people really wouldn't need to work anymore. So taking that into account, giving each child $1,000 just one time when they're born grows into $700,000 in 70 years. That actually would take the place of having to work for it over that period of time. Now, there's a lot more details, of course, but that's just a thought that I had when I looked at what the results of this calculation was. So anyway, it's really interesting. It's a fascinating topic. I will most likely 100% guarantee you that it was Scott Bessent's idea rather than Trump's idea. But they're called Trump accounts. Bessent is a genius, I think. And this is a really interesting way of doing it. Now, there's a lot more to it. There are 4 different ways that you can contribute to this. This is just one of them, giving them $1,000 when they're born. This is just one way to contribute. Can you imagine if what if it was 2,000? What if you, as a grandparent, for instance, gave an extra $1,000 to each of your grandchildren when they were born? So what does that turn into by the time they're 70? $1.4 million with just $2,000 from the beginning. And what if you contributed just $5,000? Remember, this is just a one-time contribution. This is not being added to over time. $5,000 when they're born turns into $3.5 million by the time that they retire. So fascinating idea. I think it's one that's going to be talked about a lot. I am 100% sure that the Democrats will think that it's a terrible idea, but it actually is a brilliant idea. And there's a lot of things that we can fix. Now, one of the things I'm really concerned about is politicians will figure out a way to steal this money. So I don't know how that is going to be prevented. So that is a concern of mine. But at any rate, it's a really interesting idea of Trump accounts. I'll talk more about it next week once I have a lot more details. I'll look into the 4 different ways of contributing, and we'll see how it goes. This basically, I think, is already passed. The bill is it's part of the big, beautiful bill, actually. So we'll keep an eye on it. We'll continue to talk about this. All right, let's take a look and see where we are right now. It is 1:05 p.m. and we're sitting right at Monday's open. So the NASDAQ 100 is right at Monday's open. The Russell is quite a ways away from Monday's open. It's way up here. S&P is still a ways away from Monday's open as well. But the NASDAQ 100 looks like it's moving higher. Looks like it's doing pretty well. All right, that's it for today. Have a good weekend, everyone. Hope everyone gets their shopping done. It's going to be a busy weekend, I'm sure. Be careful out there in the roads. And I'll talk to you again on Monday. Let me know what you think. If you have any thoughts about if you watched Besant's speech, or if you've heard anything about Trump accounts, give me your input. Tell me what you think, or what any insights that you've had on Trump accounts. I'll talk more about it next week, but if there's anything you want me to research, I'd be happy to do that. All right, thanks everyone. Have a great weekend, and I'll talk to you later.